Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of ChargePoint, ticker symbol CHPT, which has been really strong since I put out the last video. That video was recorded on February 6th when we were forming this green candle, and it looks like we were testing some levels on that day when the video was released on the 7th. We did have this red day, but we started to make our way up, and it's just looked really strong with a close on Valentine's Day at a price of $2.32, going up over 12%, over 12.5% on the day with this big green candle following this sell-off, this drop on the 13th. A little bit of panic there, but that representing a great dip buying opportunity, which was followed by this rally up. So I think that's really great, but there is one thing that does stand out as a little bit concerning. And so yeah, I'm just going to throw up some levels and go over what I see in the chart. And so during that video that was released, when it was recorded, we were testing this previous day lowest close as far as this cycle goes, and that was at a price of $1.88. We managed to dip below it, offering a good dip buying opportunity then, because we did rally up and we were able to close the following day at this uptrending white dashed line here based on these two pivot lows. And so that does look like it acted as support. We closed at that level and then rallied up the next day, going up 7.69%, and then continuing higher. So it's just looked really, really strong. And some of the levels that we've tested along the way based on this Fibonacci retracement includes the 618 at a price of $1.83.5, nearly tested that on the 6th with a low of $1.85, but did not get there. And so we did also close above the next level up, the 50% retracement, at $1.92. And so we did manage to reclaim that, did test it the following day with a low of $1.91, but have just continued to grind higher. So I think that's great. Also, it does look like this channel that I have drawn here, we have broken above that, testing that red line at $2.03, bouncing off of that and getting a close above it. And so that red line is based on the low here on January 3rd, did act as support then, acted as a little bit of resistance here, and throughout this sideways consolidation, but acted as support, and we've gotten this rally up. And so on the 13th, when we did drop down more than 9% on the day, we did close below the 236 at a price of $2.11. So that did not look so good. And there was a possibility that we would retest the 382 at a price of $2.05. Really, that area just being a psychological level at $2. But that was not tested. $2.03 did act as support before we gapped up. And are now at $2.32 above this previous high. So I think that's really good. We did get a higher close than on the 12th. Again, I think that's great. But on the 12th, we put in a price, a high of $2.37, just 5 cents above today's close. And so I think it really shows strength if we could close above that level, either on Thursday or Friday this week. But if we can't, I do think that we could be pulling back. One reason is that we do have a gap here with a high on the 13th of $2.15, so we could retrace to that. Also, there is this gap to the downside at $1.76 based on the high of January 19th, and that would correspond to retracing to about 786 at a price of $1.71.4. So quite possible we could be going down to there. So those are some things that do stand out as a little bit concerning. Two gaps to the downside and also not getting a close above the close on the 13th. So we could be getting some resistance up there. However, if I do throw up the volume profile, it does look like $2 right around there, $2.03 or $2.05. That does look like a pretty nice volume shelf because of all this consolidation over here. So if we do retrace, hopefully, if we are filling this gap, hopefully $2 does serve as support. And one thing about $2 for this week, if we look over at the max pain for Friday, February 16th is $2. So I could see this as being a short-term top before a little bit of a retracement. But if we do rally higher, that could push the max pain higher to $2.50. And we could start making our way up to these higher levels, like what I have marked here at $2.42, based on the lows here, which could act actually as resistance because we do see a little bit of an increase in the volume shelf here because of that consolidation. But if we are able to make our way higher and push the max pain higher, I do think that could be really good. And so I'm really looking forward to seeing what happens with ChargePoint over the next week. While I do think a retrace to around $2 is likely, I'm hoping that we do get a rally up to $2.42, if not higher than $2.50. I think that'd be great, but reality might be coming back to $2.05 or so, or potentially the 236 at $2.11. That would be a best worst case scenario. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.